Good morning, everyone. Starting off the day quite exciting. Mr. Trump with the monster tweet, nailing the markets overnight, which I certainly appreciate. These tweets helping get the markets down near some significant support in a rather timely, fast, fluid even move down there. And I'm hopeful that today that selling continues to some extent, that the wrong way option traders, which jumped on the boat a couple of days ago, and, markets stabilized after they did that. And they continue to do so today and get our internals lined up just nice and perfectly for some type of retracement move next week. The way things are coming down here, and I'm assuming that they'll keep coming down into this level, initial level down here. And, once they get there, we should get the stabilization, some type of counter trend rally. Significant moves typically don't happen without some stabilization. Now, that certainly wasn't the case over here looking at the post-Christmas low, but just going down to it, you did have a monster wide range bar up. So, one of the questions that was asked of me yesterday in the green room was, this was a significant turn, or if the markets or the S&P could get back above 2,800 on the spiders 280, would that be a type of a failure reversal pattern? And I said no, because in reality, it really wouldn't be a very big bar in comparison to this. And it would be happening on a second bar. We could look at the spiders on that, but what to look at is what would be the most helpful going here once the internals are lined up. So we historically get, patterns of a retest, and over the recent years, we've seen some less of them where, the aggressiveness and the way funds are moving these days, and algos and information flow and so on. The older patterns from the past, they're still around. You just don't see them as consistency as you used to. Whereas this pattern historically would have come down into this area here, and you would have got a retest, and that would have been the no-brainer entry. So one of the things to look for is, let me just clean that up, is a gigantic reversal bar, which of course is going to make a humongous stop loss. So at some point you got to just, with your proper money management, get in there and with a small position. So, you got some skin in the game, and then look to add at the appropriate times. So when you see giant moves to the downside, and we don't have that here, we don't have the ultimate fear pattern here. We've had, you can see the stall and the stall. I guess we're looking at the futures here, but stalls and stalls where the anticipated, by the pullback again, is going to produce a move up. And things are a little different as far as, okay, this trade war thing seems to have gotten much more mature versus what it was, over here, and just the day-to-day little aggravation of it. But just looking at things technically as we do, you can see that the trend has been violated. Prices are under that pivot. The 20 MA is pointing down. It's under the 50 MA. The 50 is flat and starting to roll. And now the futures are closing under the 200 MA. So there's looking at the moving averages and looking at prices, of course, the pivot. You can see the deterioration here, just the difference, the obvious difference. Once you know what is obvious, of course, it's obvious, but just the obvious difference of this type of a trend, pivot highs and higher pivot lows, acceleration here, and then the break of the trend, which no trend line needed. Once it breaks your major support, it's going to break any trend line. So now the first lower high gets sold, And now we have a lower low. We're coming into support. We're going to see if buyers are interested here. What do they do? All right, so same thing we do intraday in the room. When we see a reference point of support, we go to the smaller time frames and we say, hey, is there some stabilization there, like this type of stabilization? And then is there, an attempt to actually move up? And this is what happened yesterday. And it looked like, hey, prices are going to move up. Yesterday when we talked about, a bias, and we could look at the hourly charts where they have the gaps. And I showed you that there was a reference point up above and a reference point down below, and prices just traded between there. But when this move began with this wide range hourly bar, at that point, I was thinking, well, let's get a little consolidation and we can get above here. We're going to have a great long trade setup. And when that next hourly bar flipped all the way down and took that out, I was like, that's not happening here, not without some more repairing of the damage. And while that attempted to happen, it was red, green, red, yada, yada, yada. And then, it just kind of really went nowhere. This little dip here was bought. And then, then there's the tweet. So we're coming close to support areas here. I can see I've got it marked off, that swing low right there. And so as we get closer to that, buyers will step up. I can guarantee it. And I always say, we always know where they're going to be. We just don't know how many are coming to the party. So what we look for is, the big giant bar. And as we know that, hey, we don't know how many funds are out there, who cares? But we know they're acting in unison when you see a gigantic bar like that, and they're not going away. So they're going to look to buy the dip. And here the dip wasn't that big. So that's what to look for. Either ideally this just keeps going down. I don't know to where it stops. Maybe giant green bar, maybe retest. A lot of times, you do get that rebuilding pattern. So we'll just see how that all develops. And of course, whatever news, it's China, now it's Mexico, could be somebody else next week, So yield curves are either inverted or nearing inversion. So there's a lot of information there that says what's going on here has the real potential for a big correction. But that doesn't mean we're not going to take advantage of smaller counter trend moves along the way. And we'll just see how it all shapes up. This kind of new stuff can get turned around on a dime when somebody decides they're going to play nice. NASDAQ futures, right, finally hit the 200. They were hanging there above it. There was nothing to the left. And here's the 200 with very little to the left. Is further down here. And this looks like it has to go down there. So I don't know. None of us know whether it'll be one giant red bar. I kind of would like that to happen, tell you the truth. Or whether this just kind of hangs here on the 200 and we get some, flip-flopping around and then it goes down again. But look, until we get the giant green bar, or we're down here at this support and we get some kind of retest or the giant green bar, it's not time to think swing long. Just think for shorts, some things that are showing relative strength, and I think it's down a little bit here, but I had this on the list. If the markets were in a happy mood, if this was going to take out this area right here and possibly move up to 100, but it's actually inch down. It's not getting hurt badly, but this is relative strength. And that's such a simple concept when you look at it like this, just a couple of moving averages, and just, you don't even need the moving averages. Is the market going down? Is the sector going down? Is the stock going up? Well, it must be stronger than the rest. So it's really simple. You don't need some exotic indicators or tools to determine if a particular stock is stronger than the broader markets. And just look at the chart. It's going up, it's going down, it's going sideways. Is it doing something faster than the broader markets or the sector that it's in? The Dow, it is coming down very close to this swing low right here at 2480.62. Not a whole number, but it is a swing low. Be paying attention to it. It did come down to it. Got pretty close a couple of days ago, so kind of diminished it a bit. But look at the weekly chart here, where we've condensed this information, and now we've got a breakdown, and the assumption is that it'll look like this or something like it at the end of the trading day today. If this was to turn into a bottoming tail bar, and part of the lesson that we had in MT Live is like, the bar is not complete until the end of that time period. So this bar right now strongly suggests that the Dow is going to continue to go down, and this is just a momentary stall point before it goes lower. But bar by bar analysis, well, we've got 8 hours or what have you until the end of the trading day to see what this actually looks like. And of course, right, the whole beauty of bar by bar analysis is that, look, let's assume that we go into the weekend and we're looking at this. We all are going to think this is going lower. There's a price void below, and that is the proper thinking. But what if Monday morning or over the weekend, President Trump and the president of China and the president of Mexico get on TV and say, we're in love and we're going to play nice together and help all of our economies do just wonderfully. And next week, we're looking at a bar, right, that looks very different. Right? We're looking at, boom. So bar by bar analysis is a concept that allows us to change. So as we look at things technically, it creates a belief about the future. And that belief is aligned with the chart. But once we put our money there, it's kind of hard to let go of that belief. So bar by bar analysis forces you to do that, kind of puts in your face what's going on there. So it's a great it's a great tool to keep you honest, to stay objective about what's going on and so on. For example, these bottoming tail bars said buyers were stepping up at support, but they couldn't take out the high to trigger a buy. And now we've got a big red bar down. So the bottoming tail bars, the message there has been dissipated. So down we're going. And let's continue here. Bonds are moving up, which that yield curve is going to get closer to inversion. The 3-month versus the 10-year inverted yesterday, and the 3 versus the 30 is getting even closer. All right, I think yesterday it was at 0.33, so it's getting closer to 0. And this is going to help it get even a little closer, but we've got this big resistance area up here. So I would think that this is going to stall just that resistance. And on the weekly, you've now got a wide range bar. That's another concept that we covered when I think in MT Live with the candles. How this move here into support got bought, and now the range gets bigger. So a wide range bar suggesting the slowing of momentum is coming. And gold popped yesterday. It finally got turned around. It's up nicely this morning, and it's up near this high here. So it's likely to stall here a bit, and you got the next level. Let's just duplicate that.
Hey, Greg, and just to add for Debbie and the other listeners about how we leg into covered calls, Debbie was asking about selling calls against her long position on the day before, bullish green day. Mm-hmm. I said, no way, the move's just starting. It's not, the momentum hasn't slowed. So, Debbie, I hope you, learned another great lesson there.
Yeah, she asked me, and then you added to my comments to reinforce the whole idea that, I think it was on GDX that she was asking
about. It was, correct.
Right. And so I was like, no, this is a
It was
first
yesterday, right?
really powerful green bar. And, I always like to show everybody little nuances of how to use subjective tools, right? Because moving averages are a subjective tool, meaning they're not support and resistance. They don't really define a trend per se of lower highs and lower lows. It's just a line. And as you use different moving averages or types, they move around. So, the levels can change dramatically, but prices don't. So what we have happening here is, look, these green bars look similar to that green bar, right? Where everybody can see that. But this green bar happened after the momentum just began to slow down on the way down. So that first green bar, and it's got tails, a little baby tails there on the top and bottom, it's not going to have as powerful an effect here. And then you get another green bar here, and it gaps up above the high, and that's pretty powerful. It's close to this resistance, and maybe that could have got going. And then it couldn't, and back down again. And now another green bar, and it can't get going. And now this red bar closing on the low, and the topping tail there is like, damn, this thing's going down. Put a fork in it. It's done. It's cooked. Look for it to go lower. And it didn't. So now we've got these pivot lows, and marking them like that just makes it easier to just, hey, these are pivot lows. These are creating support. But yesterday's green bar happened where, look at how these moving averages are pinching together now. The 20 on top of the 200, and a minuscule little distance between them here, as opposed to the big distance that was between them here. Meaning, these are visual aids. You can see this in the price, but the moving averages can be a way that just speeds up the analysis for you to say, look, this volatility and ranges have come together to a point where a move is going to happen, and it should be a significant one. Now, which way is it going to go? It could have been down, but the green bar is up. So when Debbie asked, should I sell a covered call? It's like, no, not this time. Doesn't make sense. This strongly suggests it's going to go up. And of course, the markets were doing what they were doing, and that intermarket analysis is of a great benefit as well. Okay, oil down again. All right, so another bearish sign for the economy, and all the great work, if you see it as such, during the last year and a half or whatever that Mr. Trump has done with the growing economy. All of this, which I'd like to believe has a long-term, very positive effect of making a level playing field around the world from countries to do business with each other, will have long-term benefits. But in the moment, this is the pain to correct the mistakes of the past that are happening right now. And everyone should be grateful that you're either in the green room with great other traders and people to offer ideas and what's going on there that they can offer. And you guys that are on YouTube should be getting in the green room, but at least you're here to where we can give you objective information of showing you trends and into market analysis and market internals and such. But obviously this is a bad sign. Bonds going up, which means yields are going down, crude oil's going down, copper is going down. Look, Alcoa is going down big time. Steel is going down, and even utilities, they gave it up. So these are bearish signs, and it's incredibly important for everybody to have money management part of their plan, know what you're doing, have a plan, because during the bull market where it's relatively easy to make money, the majority of people lose it all and then some when things get ugly. And so seeing where the markets are at here, probably some of you have already experienced some unpleasantness during this correction. So, Other than that, Dan, I don't know anything else for me to look at here. Pretty much across the board. I mean, transports, breaking down. They went under a level there. We'll see if they stabilize in the Russell. It's got plenty of room to go down here unless there's some miracle recovery here today.
Well, let me ask the derivative question of Debbie asking about market internals. So with a big gap down, obviously your swing internals aren't going to move because they're based on a closing basis.
Well, they're going to move. They're just, you can't rely on them for say this is what they'll look like at the end of the day.
That's my derivative question. How can you use market internals within the first 30 minutes to give you, obviously we're going to be looking at price action, and I'd love to get a big old sell off with a tick spike and an intraday push call over 1.5. That'd be my recipe.
Yeah, well, at the open, it's not going to be of much good, because maybe not all stocks are open, and you're going to get an extreme on the gap. So we'll see after the first 30 minutes how things as to what they say. But the couple of days ago, I guess it was, I mentioned in the room, the wrong way option traders are already loading up on puts, and then that put a floor under the market. So, and yesterday on the sell-off, I told everybody in the room we just got a tick extreme. So I'm monitoring these things intraday, and if you're in the room, I make people aware of it.
All right, cool. Yeah, let's go through opens here real quick. Actually, I'm not going to go through opens because we have believe it or not, no problem children. We got some covered calls. We got a few longs. We have a few shorts. We have some call spreads. Amazon's let it expire worthless today. PayPal. Everything's fine. And the reason I just want to jump to new trade opportunities, unless you all have an individual question on an open, since we only have less than 5 minutes, let's see if we can find some tier 1 gappers here. So Okta here, big old gap, basing like a champ, maybe a put spread. HIB is not an earnings or gapper, but gap up, pull back. That'll be on my list for next week. 273. It's a big gap down. This is not a good gap and snap candidate because the way it's stair stepping down. Compare that to this. This was more fluid down. It's a big gap down, and it's right here to this nice breakout area. So I have this on my gap and snap, maybe for a put spread with the gap down in the market. We're going to get a spike up in the VIX, obviously, which is going to give us higher premiums on selling put spreads. This was actually from yesterday. I just saw it in this window. 29. There you go. Oh, that was earnings too. There you go. There's a put spread candidate right there, Mr. Big. I would have sold naked puts on him yesterday, but it had earnings. Let's keep going here. So I like Big. I like STZ. Zuo, $13. That's just total damage. Adobe, 270. Bearish gap here. That's a call spread candidate. This is a penny stock toy gapping up in a weak market. I don't trade those. DE is nothing, but I like this retest engulfing. So this is whoa, look at pre-market. It's recovering. So if we get our turn in the market, or when we do, this is my favorite time to trade, is to sell expensive put spreads on bottoming patterns after mini crashes. And this will be a go-to of mine, selling a put spread for next week, provided this bar holds. So the 136 or whatever. Red Robin here, getting his clock clean, $26. Nothing to do. WSM 57 and change. It's a big bullish gap, but no pattern. NTNX getting clocked, $26. No pattern. KSU, wow. That was a bearish 1, 2, 3. Now 111. The gap's excessive though. General Motors getting whacked on the China news. $33. No pattern. VMW had earnings, 179. If it stabilizes, I'm going to put that here. If it can stabilize, maybe 30-minute high. Remember, this is Friday, option expiration day. So, and this is earnings. So I love selling call and put spreads on earnings patterns for the day of expiration. So this is a candidate. VMW put spread expires today. Go through our checklist. We need a bullish intraday reversal. We need tight spreads. We need a good credit. You know the drill. Ulta 315, bearish gap, no pattern. Uber had earnings. Oh, look at that, 41. Is Uber optionable yet? It wasn't last time I looked. And I'll go over our opens. Yeah, it's optionable now. So that's a candidate. Put spread. So I like big. I like, you've heard the ones I like. And Uber, obviously, without a doubt, is going to be raising, lift here. See, 56.40. GPS 1750. That's not a good gap and snap candidate either, but it's a watch. CNS was on my list from yesterday. SAFM, garbage. Facebook, call spread candidate. We talked about it in the green trading room yesterday. 15-minute, 5, 10, 15-minute low. If the market can't hold, is Uber lost 2 billion and it's beating up. That's funny. No, exactly. That's why trading earnings is just nonsense. It's what. That's why something can gap up on bad news. It's because the news was less bad than the market expected. It's that simple, folks. That's why. Here, look at AMT from yesterday. Look at this holding like a champ. If this were to close here, this is a 100% delicious 1, 2, 3. But the market's only been open less than a minute. But I'm just telling you, that would be, we talk about share sizing and this and that, and always have the same share size, same loss. No, I have an exception. I would double my lot size on that.